recent months, Meta has been capturing headlines with its remarkable recovery, up over 30% since its low in August, setting new record highs along the way. This momentum has sparked questions among investors. Is this the time to buy, or has the opportunity already passed?
Since September, Meta has climbed 11%, setting record highs. What's interesting is what the stock was doing prior to this 11% climb. From April, Meta was playing a game of
sideways tennis, trading inside a consolidation. Now, this might not sound exciting. After all, who gets thrilled about sideways movements? But here's the thing. This consolidation follows an eye-watering 505% climb from November 2022 to April 2024. We're talking about a complete renaissance after that brutal 77% decline between 2021 and 2022. This isn't just a recovery, it's a testament to Meta's resilience and ability to adapt. Now, if you're wondering why Meta's been moving sideways, it's actually perfectly normal market behavior. Think of it like catching your breath after running a sprint. After a 505% move up, the stock needed a breather. This consolidation period isn't a sign of weakness. It's actually a sign of strength. It shows that despite the massive gains, investors aren't rushing to sell. They're holding on, suggesting they believe in Meta's long-term potential. What's particularly impressive is how Meta's handled the rocky earnings season for big tech in July and August. Sure, it took an 18% hit, but here's the crucial part that many missed. It stayed within its consolidation range, refusing to break through the bottom. The recovery, swift as lightning, with the 30% climb that followed. This kind of resilience is exactly what you want to see in a stock that's building momentum for its next big move up. During this dip, social media was absolutely flooded with market top calls. You know the type. Folks chasing clout rather than profit. It's amazing how many experts suddenly appear during market dips. While everyone was panicking and making doom and gloom predictions, I was telling my investment community to stay patient. Why? Because what we were witnessing wasn't a top. It was a base being built. And in the stock market, strong bases lead to strong moves. We also saw stocks like Coca-Cola and Walmart pushing to new highs during July and August, while big tech was slumping, dragging the indices down with them. Knowing how to look at the stock market as a whole brings calm and perspective. Big tech is just one part of the whole. There's an old saying in trading that's particularly relevant here. The longer the consolidation, the bigger the breakout. Meta consolidated for about 5 months before breaking out in September. This isn't just any breakout. We're potentially looking at a foundation for a bull run that could push Meta to $1,000 per share in the next 12 to 18 months. And before you dismiss that target as overly optimistic, remember that many thought $400 was impossible just a year ago. The recent 11% climb since setting record highs before the current pullback suggests that we're just at the beginning of this uptrend. There's still plenty of meat on the bone, and here's why. Meta isn't just riding market sentiment. They're actively innovating and expanding their business in ways that could dramatically increase their revenue streams. So what sparked this 30% recovery from the August low? Well, Meta absolutely knocked it out the park with their Q3 performance. We're talking about a 23.2% year-over-year revenue jump that left market expectations in the dust. But it's not just about the numbers, it's about what's driving them. Their daily and monthly active users across all platforms increased by 7%. Showing that despite all the competition and challenges, Meta's still growing its user base. These gains mirror the same elements that drove the massive 505% recovery between 2022 and 2024. Back then, Meta's strategic restructuring and AI initiatives dramatically improved their margins. Their core business stayed rock solid, and their pivot to short-form video content through Instagram Reels was a game changer for user engagement. What's different now is that they're building on these successes from a position of strength rather than necessity. They're also making incredibly smart moves in security, which often gets overlooked by market analysts. Meta's implementing facial recognition to fight online scams and working with banks through the FIRE program in the UK. They've already taken down thousands of scam accounts. That's the kind of proactive approach that not only protects users, but also strengthens the platform's credibility with advertisers and investors alike. But let's keep it real, Meta isn't invincible. That 77% decline between 2021 and 2022 taught us valuable lessons. A combination of revenue declines, TikTok's meteoric rise, interest rate hikes, privacy concerns, and regulatory challenges, and of course court cases, brought them to their knees. It's crucial to remember these challenges because they could surface again. Looking forward, Meta still faces some serious hurdles. They're under constant regulatory scrutiny, especially in Europe, where privacy laws are getting stricter by the day. The digital advertising market isn't as robust as it used to be, thanks to economic uncertainties and changing consumer behaviors. TikTok's still eating into their market share, particularly among younger users. And let's not forget the massive costs of their metaverse bet, a project that's both ambitious and risky. Let's talk about some specific price levels you need to watch. Technical analysis shows several key support and resistance levels that could affect Meta's journey to $1,000. The first major resistance site at $600, that's our immediate trigger point. Beyond that, we're looking at psychological resistance levels at $650, $700, and so on. These round numbers often act as temporary barriers simply because they're significant milestones in traders' minds. On the support side, the current consolidation has created a solid floor around that $450 to $470 mark. This zone should act as a strong support during any pullbacks. Remember, previous resistance often becomes support once broken, and that's exactly what we're seeing here. So how do we play this as investors? Well, we've been holding Meta since early 2023, and we're looking to add more into the portfolio. Our trigger point, a break and close above $600. That's the confirmation that we're waiting for to increase our holding. This isn't about trying to catch the bottom, it's about finding a strong trend with solid risk management. Nvidia has been a strong performer in my portfolio since the start of last year. Recently, the Bank of America raised its target for Nvidia. The stock has already risen by 18% in October. Check out this video where I discuss whether investors have missed an opportunity or if the stock is likely to continue climbing.